I think there's something for everybody. I mean, people will point to the year-over-year revenue, which is staggering in terms of its growth, and then other people will point to the sequential sort of flattening of margins, which I think is also pretty interesting. I've said it before, the magnitudes now, I think, of the raises in terms of revenue are getting smaller and smaller on an just on a percentage basis, and at some point, the market's going to take notice. It's not an indictment of the company. I mean, obviously, the numbers are staggering. It's an indictment of the valuation.
All right, Dan, I want to get your overall thought here, but I'm going to pose it in the form of a question that I asked another guest earlier today about Nvidia. We know it has a lead. Does it have a moat?
They do right now, and part of that is this CUDA software, overlay to what they're doing here. So a lot of folks who are the buyers of these chips have gotten very embedded with this technology. It's going to work as an upgrade with Blackwell. I just say this about Blackwell. I mean, they're talking about Q4, shipments, maybe a few $1 billion. It's kind of a rounding error when you think of it at $120 billion in expected revenue this year. So we want to see how this thing ramps if it gets pushed out a little bit. I'll just say this about the comps, very difficult as we suggested. We'll talk about the sequential increases that they're seeing in revenue growth. Like these guys said, it's getting smaller. But one thing that's really important, last year, in the Q2, they had 100% revenue growth year over year, and it kept on going higher. To next quarter, up 200%, then 265%. So what's happening here is the exact opposite. Q1 this year was up 262. This quarter was up 122, and then it's supposed to be 77 and 56. So the comps are really important here. I don't think valuation is that important if you're looking at the out year right now, because a lot of folks who are very bullish on this stock, they think they're going to continue to outperform. So the thing I would just mention is that, it just didn't hit the whisper numbers on this quarter and the guidance. And so you could say that's a bit cautious, but they're not always solving to what the street expects. You know what I mean? There is consensus. They want to beat that, but they're not going to get in front of what they think, the street or investors are certainly feeling about it. So again, with the stock up 150%, we're looking at this thing down 4%. It's a rounding error.